China's recent tech advances have taken the world by storm and by surprise. And that is what Beijing is counting on to give its economy a rocket power boost. But how much can innovation supercharge its economy at a time when it's struggling with deflation, unemployment, a sluggish property market, and punishing tariffs from its biggest trading partner? We are now joined from the South Indian city of Chennai by Thomas Karackattu, an associate professor at the Indian Institute of Technology, Madras, to understand what is really going on with China's tech economy. Great to have you on the program. Thank you so much for talking to us. I just want to start with the significance of President Xi Jinping's recent meeting with tech leaders in the context of trying to give the economy a boost. What was that all about?
So when you look at this meeting, it sort of signals to the private sector that the top leadership in China, one, acknowledges the growing importance that it will have in the coming months as we see these tariffs take shape. Mind you, we have to bear in mind that the private sector in China, it sort of competes with the state-owned enterprises very fiercely. I mean, you're looking at half of the tax revenue in China coming from the private sector. You're looking at more than 60% of China's economic output attributed to the private sector. And even in terms of tech innovation, the private sector is at the forefront, 70%, 80% of China's tech innovation, right? So this meeting, I feel, symbolizes some sort of exhortation by the Communist Party to tell the private sector that we need you. You have to be at the forefront to boost innovation. You have to sort of take technological innovation forward. And in some ways, it's been also marked by some kind of support in terms of maybe financing, equipment upgrades in the coming months, maybe encouraging high-tech manufacturing. So this is how I see the recent meeting.
Right. And you know, you mentioned domestic demand, which is key, especially now in the age of tariffs, and China is focusing on that. But the other thing that's happening aside from this onslaught of tariffs we're seeing from its biggest trading partner is that the EUs and EU have made it harder to transfer technology skills to China or technology knowledge to China. And on top of that, having collaborations with Chinese tech firms is now seen as politically toxic. So how is that affecting the innovation within China?
I mean, a couple of years ago, I would have picked up a Xiaomi phone. But today, if I want a sports car, I can also buy a Xiaomi sports car. So, I mean, the pace at which this progress is happening, I think we also need to reassess how we look at the kind of change that is happening in China. I mean, bear in mind that today, China's share of global manufacturing is more than 30% of the world's total manufacturing. Now, what this means is that you're looking at China at a stage which is roughly equivalent to what the United Kingdom was at the beginning of the Industrial Revolution, to what the United States was just after World War I. So, I mean, I wouldn't underestimate the kind of technological sort of activity and innovation that is happening in China, and neither would I overestimate it, given the fact that, whatever we see happening has been mostly the result of a global enmeshment of interests that has been made possible over the last 5 to 6 decades. We've seen the institutional ecosystem move from the General Agreement on Tariffs and Trade to the World Trade Organization, to a host of other agreement and principles which made trade predictable. So I see this disruption as being more of a shock than some kind of a permanent setback.
Right, and going back to these tech developments, politically toxic or not, on April 17, Nvidia CEO Jensen Huang made a surprise visit to Beijing after the chip firm was hit with new export curbs on its sales to China. Now, the visit was kept under wraps until Huang's arrival in China's capital. And according to Chinese state media, he reportedly met DeepSeek's founder and the Chinese vice premier, a meeting during which he stressed the importance of China for Nvidia.
The increased restriction has impacted our company significantly.
Grown up in China, in fact. China has watched us grow in the last 30 years. Of course, it's a very large country. Our interactions and working and serving the Chinese companies here, and so it's made us both better.
So the narrative we hear from Washington is that the U.S. can completely separate China from its supply chains, from its development, and especially in the tech sector. But realistically speaking, we saw Jensen Huang there in Beijing, despite all of this. How integral are U.S. companies, let's do it both ways, to the supply chain in China and vice versa?
And when you talk of supply chains, when you talk of linkages in these sectors, where even in technology, say for example, in the 1980s, you wouldn't associate China with being a hub for high-tech manufacturing. They probably in the 80s were only good at soft manufacturers like bags, belts, etc. But the process of disaggregation over the years has meant that even for important components, even for important electronic products, whether it is an iPhone that is designed in California, it is made by a Taiwanese company, Honhai or Foxconn, and it is actually manufactured in China. This was the kind of arrangement that the world had gotten used to. So I would see this as an organic process, and the recent developments aimed at delinking these supply chains, it's too early to even suggest that that supply chains can be delinked that easily, right?
Right. So bring the lens back to China, and you talk about the how the growth was driven by manufacturing in China over the years. That kind of evolved in its own way, and now we're seeing the Chinese government wanting tech and innovation to be part of that growth, to fuel that growth. But at the same time, we're seeing rising unemployment. Like how realistic is it that this is going to fill that void or help create those jobs that China needs right now?
It's going to be a challenge. I mean, if you sort of assume that the sudden impact of these tariffs would translate to some kind of automatic rebalancing, I think it's going to be a huge challenge. It's not going to be that easy if you're looking at China sort of managing to rebalance all of this impact by relying on domestic sources of growth. It's going to be a challenge. But I would say, given the kind of control that the party has on all aspects of economic affairs, I wouldn't say that this might be too far out of reach, right? So of course there are challenges that relate to a fast aging society. You mentioned unemployment, both urban unemployment as well as youth unemployment is a challenge. China has, in fact, in the two sessions also identified the need to create about 12 million urban jobs. And even they realistically have kept a very reasonable GDP growth rate target of around 5%. So of course there are challenges related to a fast aging society.
Right. Let me add to the list of challenges you've named there. I mean, there is deflation, stagnant, if not a property market in crisis, and then you also added, that declining birth rate to it. For our viewers there, can you paint a picture beyond the lens of innovation and the rosy tinted glasses of, tech advances? What is the exact picture of the Chinese economy right now?
So post-COVID, I think a couple of shifts that we've seen. One, before COVID, one would see that the US was China's largest export market, but given the leadership that I mentioned, whether it was Obama, whether it was Trump, Biden, and then now Trump, we've seen that over the years that relationship already had begun to decouple, right? So in 2018, if the US was China's largest export market with roughly 20% share, over the last couple of years, we've seen this figure come down to below 15%, right? And I think in the first quarter of this year, the number stands at around 13 or 13.5%, right? So very clearly, China had begun to sort of look at diversifying its export markets. It has had to deal with domestic challenges, like, for example, the slowdown that followed COVID-19. Consumption is yet to pick up. I think the slump in property prices do not give much confidence to the Chinese consumer to move away from precautionary savings. I think they still sort of continue to save. I think to add to that, I think another major challenge that I foresee, and I think the two sessions earlier this year also sort of explicitly discuss it, is the question of food security. I mean, one has to keep in mind that the leadership of the Communist Party clearly understands that, to the emperor, the people is heaven, and to the people, food is heaven, right? That's how a traditional saying goes. Clearly, China is also dealing with a very interesting pressure that it feels on agricultural production. So they've explicitly outlined the need to have grain production up to about 700 million metric tons. The fact being that, last year, and I'm surprised that there was not much discussion on this. Last year, there was a congressional hearing in the US which wanted to restrict the kind of access China has to agricultural assets in the US. So if you look at what's happening in 2025, in the month of April, as we discussed, there were many things that were happening in the run-up to this. And, China is sort of preparing for the kind of squeeze that's being pushed onto it in all of these areas. So I just wanted to sort of highlight also the aspect of food security that the party has to focus on beyond the usual sort of points relating to growth rates, urban jobs, unemployment, etc.
Absolutely, and that is a discussion in itself. And it'll be interesting to see what the impact of China's retaliatory tariffs are, which is mostly on agricultural products. What that will mean for China in turn. But looking at all these, finally and briefly, looking at all these different moving parts, if I had to hold your feet to the fire and ask you what your outlook for China will be, can it return to the kind of growth we saw pre-pandemic? And for argument's sake, let's say during the next 4 years, our assumed length of Trump's term.
Right. I think, given the kind of unprecedented control that the government has in China over different aspects of the economy, I see the targets that they've identified mostly being met. I mean, bear in mind that they've kept very modest targets. The target is just about around 5%. The way they calculated it is based on whatever has been the targets adduced by the different provinces. If you look at the target in the previous year, they've been growing at that 5% mark. Will they be able to sort of deal with the kind of impact that these tariffs pose? Like I said, they have a challenge in terms of selling whatever they were selling to the US in all of these years. They have a challenge in selling that to the rest of the world. Like I mentioned, in terms of domestic consumption, they won't be able to mop up all of those things that they normally sell to the US. I mean, given a certain consumption pattern in Chinese society, given the fact that it's still a developing country, one can easily, intuitively understand that, they won't be mopping up those many high-tech televisions and high-tech phones and all of those gadgetry, etc. But what we would see is the Chinese, in a sense, growing closer to maybe alliances in ASEAN, maybe alliances with Europe. Overall, I think even the rest of the world has come to terms with this shock factor. I think even the WTO has a very grim forecast as far as global trade is concerned. I mean, global trade is expected to go down. But again, that this kind of a shock, as I mentioned, is for all the countries in question. I mean, even the US, by what it stands to achieve in terms of higher tariff rates, ultimately this would translate in some form to some kind of inflationary pressure, wherein the good that finally makes it to the US will have to come at a higher price, and you won't get, the cheap kind of product that you earlier had. The assumption in the US is that we would reduce taxes, and therefore people would have more money to sort of buy even a higher price product. But I think that's a little bit overinflated in terms of how it works. Overall, in terms of reducing taxes, you are actually looking at reducing other fiscal expenditure that you must have earmarked for domestic manufacturing infrastructure, etc. I mean, those of us who are familiar with the kind of infrastructure that you have in the US, whether it is the New York subway or whether it is other parts of the US, there is still a lot of expenditure that is required in order to, reboost that kind of productive growth. And for that, you won't have that kind of money if you're relying on lowering of taxes. So there is serious pressure that we are going to see on all partners concerned. Yeah. As far as the Chinese are concerned, like I mentioned, they've been able to sort of decouple slowly by looking at other partners like Vietnam, like Mexico, Korea, Thailand, even India. I mean, in terms of their trade, they've sort of maintained that sort of a relationship. So I think, I mean, China will not be the only one that sort of slows down. We would see an overall sort of slowdown in global trade.
Indeed, indeed. Worrying times for everyone, not just China and the US, but also all those countries that touch them, which is basically the whole world. Thank you so much, Thomas Karackattu, an associate professor at the Indian Institute of Technology, Madras, for joining us from Chennai. Can China's innovations plug the tariff hole in its economy? And do you think there are more surprising tech advances yet to come out of China? Share your thoughts in the comments. Don't forget to subscribe and hit the notification bell. And if you haven't seen our discussion on how China is weathering the tariff onslaught, click the video next to me to watch it now.